Are you curious about decentralized finance? Today, we're diving into a comparison between Aave and Compound. Both Aave and Compound are popular platforms in the DeFi space. They let you lend and borrow cryptocurrencies. Users can earn interest on their crypto assets or take out loans against them. Let's start with Aave. Aave is known for its unique features. One of the standout options is flash loans. These allow you to borrow funds without collateral as long as you pay it back within the same transaction. Aave also offers a wide variety of tokens to lend and borrow, giving users more flexibility. Now, let's look at Compound. Compound is most straightforward. It focuses on a smaller number of assets. Users can lend their crypto and earn interest, which is calculated in real time. Compound system is easy to understand, making it great for beginners. So, what are the key differences? Aave offers more advanced features like flash loans and a larger selection of tokens. Compound, on the other hand, is simpler and more user friendly. When it comes to features, Aave stands out with its liquidity pools and variable interest rates. Compound has a stable interest rate model that appeals to those who like predictability. In terms of pricing, both platforms have no fees for using their services. However, they might charge interest on loans, which varies based on demand and supply. In the end, if you want advanced options and more tokens, Aave is the way to go. But if you prefer simplicity and ease of use, Compound might be better for you. Thanks for watching. If you found this comparison helpful, don't forget to like and subscribe for more content.